Well, here's the twist. The Trump tariffs are not happening, at least not yet, because on Monday, the US, they announced a 30-day pause on the massive tariffs that were set to hit all of Canadian goods. And that means that for now, we're going to be in a bit of a holding pattern. But the real question here is, what will happen if these tariffs actually go through in March? Are they going to send home prices soaring? Or could they actually crash the housing market here in Canada? Or perhaps maybe they're just going to make an already tough real estate market even more unpredictable. In this video, we're going to break down exactly what could happen if these tariffs take place in 30 days. So whether you're buying, you're selling, investing, or you just want to keep an eye on the market, you're definitely going to want to stay tuned. Real estate markets hate one thing more than anything else, and that is uncertainty. And that's exactly where we are today. With Trump pressing pause on these tariffs, we don't know whether this is just a delay before they hit full force or, if negotiations will lead to something completely different. But for now, we do know that if these tariffs do go through in March, they're going to send shockwaves through the Canadian economy. And housing is not going to be immune to this. So the first thing that could happen is the cost to building homes. If these tariffs come into effect next month, the cost of building new homes is going to rise. A 25% tariff on essential building materials, things like lumber, steel, and aluminum, it's going to mean that developers will be paying significantly more for their supplies. And higher prices will likely cause demand for those materials to drop, which will again force producers to scale back production. And when supply shrinks, prices do not go down, they go up. And let's be real here, those costs, they won't just disappear. Builders aren't going to take the hit, buyers will. So if you're planning on buying a new build construction, expect that those price tags are going to climb even higher. And we've seen this before. During the pandemic, supply chain disruptions and inflation, it made construction costs skyrocket. And now with tariffs potentially on the horizon, we could be looking at another round of price hikes with fewer homes and an even tighter housing market. And that brings us to an even bigger issue here. How will this affect the housing supply crisis that we already have? Canada desperately needs more housing, but these tariffs could slow down new construction when we actually need it the most. And if the cost to build gets too high, some developers, they might delay or even cancel their projects altogether. And if fewer homes are being built, that's going to put even more pressure on the resale market. The homes that are available will become more valuable, making it even harder for first-time buyers to break into the market. So the reality is that we were already struggling with housing shortages before tariffs were even in the discussion. And if these new trade restrictions go through, the problem could actually spiral even further. And that means demand stays high, supply remains low, and the affordability could continue to be an issue. But here's where things get even more interesting. And that is, how is this going to affect renters? Unlike previous years, rents in some Canadian cities, some of the bigger cities, have actually started to drop. So markets like Toronto, Vancouver, and Burnaby, they have all seen rental prices decline after years of rapid increase. But if tariffs push homeownership further out of reach, that trend could reverse very quickly. If people who are planning to buy decide to hold off, they're going to stay in the rental market longer. And that added demand could push prices back up, especially in cities where supply is still tight. Okay, so while renters might be getting a break right now, if these tariffs take place, tariffs might make home ownership even less affordable, and landlords, they could see a resurgence in demand. So right now we're kind of in an adjustment period. If you're a renter, this might be a good time to find a deal. But if the tariffs do move forward, don't be surprised if rental prices start to creep back up again in certain areas. Now, you might be thinking that if all of this economic pressure builds up, the Bank of Canada is going to step in. And that is, of course, one of the few silver linings in all of this if these tariffs do go through and weaken the Canadian economy. And that is that the Bank of Canada will almost certainly continue cutting interest rates, and that's going to keep things afloat. Lower interest rates means that borrowing gets cheaper. And, if you're renewing your mortgage in the next year or two, you could end up locking in at a lower rate than you would have just a few months ago. And if you're looking to buy, a lower mortgage rate could mean monthly payments are a little bit more affordable. But here's the catch. If home prices do continue rising due to supply constraints, lower rates, they won't be enough to balance it all out. I mean, yes, your mortgage might be a little bit cheaper, but if homes are still unaffordable, it's really not going to solve the problem, is it? And if the economy takes a hit, that could change everything. There's one major wild card here in all of this, and that is what happens to the overall economy if these tariffs go into effect. Some economists, they're already warning that if the US moves forward with these tariffs and Canada retaliates, we could see a GDP shrink by up to 5%. That's a bigger hit than what we saw during the 2008 recession. If that happens, job losses could follow. And if unemployment starts rising, people become more cautious and they start to delay big purchases like buying a home. So if demand slows down, we could see home prices start to level off and possibly even dip in some areas. The big question is how big the economic hit would be. If the tariffs are short-lived, the impact might be minimal. But if they drag on, the housing market is going to start to feel the pressure. So now the real question is that where does all of this leave us? Does this 30-day delay actually mean that we're in the clear? The truth is no. Right now, everyone, buyers, sellers, developers, and investors, they're all in a wait and see mode. There's a lot of uncertainty, and that alone is enough to shake up the market. If these tariffs do go through next month, home construction will get more expensive. Housing supply could tighten even more, keeping prices high. The rental market could stay mixed, with some areas cooling off while others start to heat back up. Interest rates, they may keep falling, but they won't fully fix affordability. And of course, a potential recession could add another layer of unpredictability to everything. The next 30 days are going to be key. And if you're planning to buy, sell, or invest, this is going to be the time to stay informed and prepare for different possible outcomes. And if you do want to talk through your options and figure out the best move for yourself, feel free to book a call with me using the link in the description box below. Otherwise, we're going to keep watching how things play out, and we'll see you in the next video.